Alright everyone, it's YZ here from Compound Club, and today we're going to be doing a recap on our most recent Bitcoin short that I called in the chat. Going to go over the reasons we took it, why I took it, what my ideas were behind it. So as you can see right now we're running it here. It's still running, we still have it open, I'm pretty sure we've still got it open in the chat. Right now we're running at a nice, it's about 6% up, but we've been all the way down to 8%. I can tell you right now what I'm up through my thing. Currently I'm up 415%, but that's on 60x leverage. So yeah, we got entry just below range. So I'll delete that quickly and I'll go over the ideas behind why we took it, what everything was for it. So let me hide the EMA. So firstly, let's go back to the hour chart. I've got it marked here. This is where we originally were talking about entering a short from above range. Around this candle here. So what was the ideas for this? Well, first of all, the first idea was if we look back through all these older wicks, as you can see here, you've got massive pumps in giant white candles. It would be green, obviously, and then dumping straight away. Happened again here. White candle to pump it up and then dumping straight away. White candle pumping up, dumping it straight away. Here happened again and again. It keeps happening. It keeps just being large green or white candles and then being retraced. So what is this telling us? This is basically telling us, oh, glitch there. What is this telling us? It's basically telling us that, well, it's telling me, this is what my ideas, my thoughts were, that market makers are trying to build shorts in this range. Let me just get rid of all these arrows, but as you can see, yeah. So yeah, that's what it's telling me. It's telling me market makers are trying to make shorts in this range. Obviously, we've been in this Bitcoin range for a fucking long while now. It's been, what, almost a month, over a month now. 23 days, so just under, or 21 days, just under a month. So yeah, we've been in this range for a long time now, and obviously it looks like market makers have, this was the idea behind it, was market makers were making shorts at this point, because you could have seen by these wicks. So that's the first reason. It looks like the market makers trying to build wicks. Secondly is we have these two outlier wicks. We have this one and this one, both at the top of the ranges and the bottom of the ranges. This one obviously got filled here, so we're going to ignore this one for now. Our main focus is going to be on this larger wick up here. It's probably better if I draw it in a 4-hour time frame. So yeah, here you go. You can see this wick here. So right now, this wick has not been filled at all, which means there's a lot of liquidity lying up here. So if we go magnet, where's my tool? Here we go. Yeah, so we're on here. That's your top of your wick, exactly at 31,500. Now that would not be a coincidence in my eyes. That is a very, very round number. There's no way the market's done that themselves, which obviously is telling us that the market makers decided to do that. You've also got your 50% of your wick here, which is quite important because for the wick filling, you need to fill at least 50% of the wick for the liquidity to be taken. So yeah, we'd be looking for it to at least come up to here. So you would also be questioning, why is the market maker pushed it up to here? So it looks like he's been trying to build shorts this whole time because we've had all these white candles that have been retraced instantly. But if we look at high block capital, I've got it up here. This is what we had the week before we took the shorts or so. On here you could see we had this huge level of liquidations here. This is basically at the 31.7 to 31.850 range, which I've marked here. And you would question why the market maker hasn't pushed this wick up to liquidate all these and then short. But that's because he's trying to build more shorts. So that's why I had the first reasoning for us going above range one more time before taking our short. So that's why we were waiting for it. So we had the high block there. That's where the liquidity was. I can delete that. Oh, things decided to break. That's good, isn't it? Okay, now we're going to run with it. You know what? We're going to run with it. Bar replay can come back quickly. Let me jump back on the replay. Bar replay decided to die on us, but it's fine. There we go. Alright. So we were back here anyway. So we had this wick and this wick to fill. So my thoughts were, and what I told everyone was, I was expecting us to bounce off the mid-range one more time and then work our way up to this area up here to liquidate these shorts. The other reasoning behind that is obviously you got the three reasons was because its market maker seems to be making shorts because of the huge white candles and then being retraced. You've got your high block liquidation levels, which were marked here, and then you had your 50% and your 100% wick here. So this was obviously your 100% wick. I'll mark this. You can see the 50%, but 100% I'll mark. There you go. So that's where we want to liquidate it. So that was my fault. That is what I said to everyone. I was waiting for this to come up and push up and then liquidate this level up here before we took any shorts, because it seemed that was seen as the smartest place. So if we play this out as how it went, we kept moving, and there we go. We touched them liquidations. So we basically liquidated everyone in this range, so this now became obsolete, as now everyone here had been liquidated, which is exactly what we wanted and exactly what the market maker wanted. I think we pushed exactly up to a level, but I'm not too sure. 31,804, so a pretty decent level. So we pushed straight into that liquidation zone and liquidated basically everyone who had shorts from the top of these areas here. Got liquidated here because this is either where their stop losses were, or if they were in high leverage, that's obviously where their liquidation zones were. So that's how we used the information. So we got up here, but the reason we didn't enter a short right from here is because there was still, in trading, there's never impossibles. Everything is possible. And the risk was we could keep pushing up to the 32 level up here. If we pushed up here and then retested this, we could push way higher. So it was risky to take your shorts from this area straight away. I know T-Bag did, but obviously he's a bit more ballsy than all of us. We just wanted a more secure play. So the reason we waited was because we didn't want to take shorts from there, because there was a potential we could push higher and up to 32k, and then 32k is a very key level to bounce off us for us to go way higher up into the 40s and whatever. But for now that didn't happen. Oh no, let's not delete that. I'm gonna delete it again. I'm bloody useless at this, aren't I? Jesus. Ah, there we go. So yeah, so we didn't enter there, but we were waiting, because now obviously what we can see here after this huge push is we've left loads of liquidity all in these zones here. This is all liquidity pool that needs to be retraced, because everything needs to be retraced. We can't leave liquidity behind, but that is the original reason. But obviously, as you can see, 50% wick got filled almost perfectly to the dollar with this one, so you could have almost been faked out by an entry there, but then obviously went and smashed through the 100%. So this now has been filled and is no longer of any use to us. So now we've had our final push, like I said, for market makers to build their shorts, and that's also allowed us to deviate above range. We've nice deviation above range on the fucking 4 hours. We've been up here for a while, so it was a nice deviation. But we also still hadn't entered at this point, because what the thoughts were is, for more confirmation, we need to break back into the range and then test this level and make sure this level holds strong for us. So what I did was, it played out for a bit more. We jumped in, but then we were on the 15-minute when I took my entry. So we came down, came back into range. We were watching the 15-minute. This is still before I called the entry. Oh no, this isn't before. This is where. So we came back into range and we jumped down. So then we were pushing up. So we came into this level. Obviously, as you can see, this level got tested. It got broken a few times, but nothing really closed heavily above other than this one. But then we saw a lot of like downward pressure and downward force from that point. So we took our entry on this candle here. That was where we took our entry. We had our stops. I placed my stops just above the levels of all the liquidations, kept it tight, and then we were wanting to see it push all the way down from this range as far as we could. So the targets were originally mid-range was our first target. So obviously you can see I've got mid-range marked here. That was our original target. So after the push up, we got a retest and down. That was our first target. And then from there, we were targeting lower and lower on Bitcoin, because at the moment we've still got it open, we're still running it. We're just waiting to see how Bitcoin reacts with everything. Right now, we have just broken out the bottom of range in real time, so we could be seeing more downward pressure down into the 28 zone. I've got 28,442 marked. Obviously, as you can see there, we had a huge dump, and that basically retraced all the liquidity I just drew out for you. Got retraced. If you're on like 4 hour or whatever, like that huge liquidation pool that we left behind, or huge liquidity pool we left behind, got fully retraced in almost one candle. So, you know, it shows how important liquidity is to them. That literally got retraced fully. Obviously, we left now a huge liquidation zone behind, but obviously that's just how Bitcoin plays out sometimes. And then we continued to just range and push. The quarter range acted quite strong, but then we also had the 50 EMA as a like resistance here. It kept bouncing off of it, but was unable to break it the whole time. And then we came down and we just kept pushing, and we eventually we pushed out of range, and now we're just below in these. No, I'm looking at the wrong thing. We're in these levels here at the moment, and we're looking like, it looks like we want to come down here. The next play, or the next like thing I'd be looking for, because obviously our short's still open, so the next play we'd be looking for at the moment is a deviation below this range, a test, and a long. If not, if we break below and we can't break back above, maybe a short, because obviously, as you can see there in that blue box, that's a huge level of liquidity I've marked out again. That needs to be retraced at some point. But for now, I don't know how much further we can go down on Bitcoin. It's looking like we might just play this new range I've got marked out here. But yeah, that is the update. Oh, there we go, another one. That is the reasoning, and that is why we took this trade. And that's the that's it. that is why we took the trade, and that is the psychology behind it. Peace.